So you're thinking about buying a home in Philadelphia, and you've been faced with this term called the tax abatement, but you're not exactly sure what it is. Today I'm going to let you know all about the tax abatement, how it can save you thousands of dollars over the duration of your ownership of the home. And I'm also going to show you some resources that you can access yourself on the internet that'll show you how to analyze what these tax savings are going to be while you own the property. I'm standing outside of OCF's newest development right here on Germantown Ave. It is located right across the street from the Piazza, the brand new Alta building that the Piazza put together. Fantastic location. When you buy a new construction home like this, there are extreme perks in terms of your tax savings. So today I'm going to teach you all the ins and outs that you need to know about the Philadelphia 10-year tax abatement. This is Naveed Abraham, Navigator Realty Group. Let's get after it. If this is your first time to my channel and you want to know everything there is to know about Philadelphia, the good, the bad, and the ugly, then please like this video, tap that subscribe button, and hit the bell for notifications. That way you'll be one of the first to be notified when I release a new video. So today we're going to be talking about the Philadelphia tax abatement. You may have heard this term if you are currently shopping for a new house in Philadelphia, or if you've been doing some research about home buying in Philadelphia, you may have heard of it. So the 10-year tax abatement is what it's called. Where did it come from and what is it all about? Basically, this is a way to incentivize builders to come and develop new construction in the city of Philadelphia, to revitalize it, to create a burgeoning new construction scene in Philly, right? Back in 1997 is when it was passed, and in 2000 is when it was actually implemented. There's still many proponents for the tax abatement, but there are also people who are against it. It was actually recently passed that the full 10-year tax abatement would be no longer. It now is something where over those 10 years, you lose 10% of that abatement every year. And I'll kind of show you exactly what that means. So the whole gist of the abatement is that you are only paying taxes on the unimproved value. When that comes to building a brand new construction building, that means all you're paying taxes on is the land. But in terms of a renovated home, because you could still get a tax abatement on a renovated property, just depending on what the Office of Property Assessment requires. I don't exactly know all of that, but it has to do with the amount that you spend and what your permits say that the amount you're supposed to spend is. But for these renovated homes, it is whatever came before it. So instead of just being the land, it's whatever shell of a property was there before. You're getting taxed on that for the 10 years. So I'm going to run you through a spreadsheet that's going to show you exactly what this looks like when it comes to numbers. The big thing to realize is that if you're buying a home that's already built and it has a tax abatement, you have to know how many years it's going to be until that runs out, because you're going to have to be prepared for what those payments are going to become. You really have two choices with tax abatements in general. Either you got to start making more money by the time it runs out, or you got to sell the property if you're no longer able to afford your payments. Another little note that you have to understand is that just because the abatement is in place does not mean that your property value will not go up. So in Philadelphia, we have property assessments. They used to take place with some sort of regularity. I don't think it was quite annually, but there was a moratorium on tax assessments during COVID. So the previous assessments were from 2019, I believe, and they didn't do a new tax assessment until the 2023 year. So when these revised tax assessments came out that had been on a break for however many years, people were hit with these values that were outrageous. Some people's taxes went up as high as 300%. And a lot of people were upset because there really didn't seem to be any rhyme or reason. You could be living on the same street as another property that was in similar condition, similar age, and all that jazz, maybe just sold at different times, and the assessments were like $100,000 to $200,000 off from each other. There is a whole process where you can appeal the assessment. It has worked out for some people, but I know that it is a lengthy process. So anyways, let's share my screen here and jump into some actual numbers. I put together this little spreadsheet for me to be able to do these tax abatement numbers for you. The Philadelphia tax rate on property taxes is 1.3998%. So I've got the tax rate in here on the spreadsheet ready to go. We're going to look at two different kinds of properties. We're going to look at one that's new construction, and we're going to do one that's renovation. Remember, new construction, we're only going to get taxed on the land, and renovation, we're going to get taxed on whatever came before it. I already picked out two properties from our local MLS. That way we have real world examples. to go off of. And after that, I'm going to show you what things look like if you don't have the tax abatement or if you run out of the tax abatement. Another little thing that I want to note real quickly is that the tax abatement does not go into play until you buy the property. So the developer, the builder, needs to submit the application before they start the building and before they are going through construction. And then once you sit at the closing table and you buy the property, you then fill out the application to start the abatement. That's when your 10 years starts. The full 10-year tax abatement actually went away at the end of 2021. So any applications that were submitted January 1st, 2022 or after, it's now subject to a 10% decrease in that abated value every year. So instead of a full 10 years, you'll get a lot in the beginning and then chips away by 10% every year till the end where you have no abatement left. This is not the same for commercial developments. Commercial developments, it does go down to 90%, but it stays at 90% for the 10 years. One of these days, I'm gonna do a video of all the development we have going on here in the city, especially here in Fishtown, Northern Liberties, where there are a lot of new buildings, apartment complexes that got put up all around the same time because it was these developers trying to cash in last minute on that 10-year tax abatement. All right. So let's go to our examples. I'm gonna pull up this website, property.phila.gov. I'm gonna show you this and one other website just as resources that you can use while you're looking for a property, and you should be able to calculate all this stuff on your own. You know the tax rate, 1.3998%. All we need to know is what is the taxable amount of that the city is deeming can be taxed on this property, and then you can figure out what your taxes are gonna be annually. If you are at the property website, other things that it tells you besides your tax balance, tells you obviously what the property is assessed for, when it last sold and for what price. It's got the owner on it. This does have a little calculator for exemptions. I will talk about this in a little bit, the homestead exemption. You can check out your tax balance. It links you to another website. Here's the numbers we're going to be using today. Then it also tells you like, what's your trash day? What's the lot size? What's your local police district, elementary schools, high schools, that kind of thing. So that's the property website. The other website I'm going to show you a little bit later digs a little bit more into zoning and permits for construction, renovation, that kind of thing. So we're starting with this address. Address doesn't really matter, but we're going to take the values. This is a newer construction. I'll show you the listing just for shits and giggles. It was built in 2018. It's a 3-bed, 2.5-bath condo right here in Fishtown. It's listed currently for $529,000. It's another thing to keep in mind. Your assessed value has nothing to do with your sale value. This property is for sale right now for $529,000, and the market value by the assessor, they've given it $429,700. All right, so we're going to put these numbers into our spreadsheet. So we got a market value of $429,700. Then we have taxable land, $64,500, and the exempt improvement, this is our tax abatement, $365,200. That number right there, that's the number that's going to be reduced by 10% every year with the new abatement that's post January 1st, 2022. There you go. The only thing that's taxable in this scenario is the land, $64,500. And with that, that gives you an annual tax of only $900. Monthly tax, $75 a month. I don't know if you realize how cheap that is, but when I do the bottom half with no abatement, you're going to see exactly what kind of difference we have going on here. If we jump over to our new property, this is a renovation. Again, address doesn't matter, but let me show you this listing. It is an older home. It says built late 1800s. Photos don't want to load right now. That's okay. It's listed for $539,000, but they did a renovation on it very recently. So if we go to the property website, you can see they did have some sort of abatement before. Let's not look too far into that, but the current abatement is broken down because it's a renovated property. We had both taxable land and taxable improvement because there was something standing before the renovation occurred. So let's use these numbers and plug them into our spreadsheet. We had a market value of $507,500, taxable land of $101,500, and an exempt improvement of $284,200. I don't really know what the exempt land is for. You don't really see that very often, but we end up here with two taxable things, our land and our improvement. In this example, that brings us to an annual tax of $3,125 and a monthly tax of $260.48. Fantastic, right? Just to make this more clear, we're going to look at what exactly these values would be if you bought these same properties, or let's just say same price property. You can look at it both ways. This property that you purchase, when it runs out of its abatement, or a property that you're going to be looking at that's a similar price and what those taxes would be. So let's say we're going with a $429,000 property. We're going to give it the same land value, but now instead of our improvement being exempt, it is now taxable. I'll just type this same one in here. 507,500 for this guy. We have taxable land, and then our taxable improvement is going to be everything else. At the end of your abatements, or if you're comparing two properties side by side, same market value, 429,700, you got your annual tax of 902, and then your annual tax of $600 or $6,000. So if you're looking just at your monthlies, comparing two properties, one with an abatement and one with not, look at that difference in your monthly payment. It's going to be about $425 difference. Big deal, right? Next property, it's not going to be that much crazier, but $507,000 market value. The whole thing is taxed, but with your tax abatement, only $3,000 and $260 a month. No abatement, $7,000 a year, $592 a month. Again, another $330 difference in your monthly payment. Huge deal here. So when it comes to shopping for a property, if you're in an area that you want to be in and you can afford to purchase new construction or newer construction or a renovated property, just think about how much money you could save versus buying that same property at a different price. When you speak with your lender as well to get a pre-approval, you want to make sure that they know if you're purchasing a property with or without a tax abatement. A lot of times they're using just what they would consider an average tax for whatever price point you're looking at, because they obviously do the calculation, 1.3998%. What is that property potentially appraised at or assessed at? Appraisal is a completely different thing. We'll get into that another time. But that's going to make a big difference in what purchase price your lender is going to tell you that you could afford. So that's pretty much the gist of the tax abatement. I'm going to show you another website just because we're here, and it is a resource that you could use if you're looking at properties and you want to know information out about them. I'm going to use the same renovated property we were looking at 2220 Trent Ave. Atlas.phila.gov is another place that you could look up any property in Philadelphia and dig a little bit deeper. It has all the deeds on file. It has any sort of here's when they were filed, who they were filed by, so you can see everybody who's owned the property prior to the current owner. You have L&I records. Where this becomes important is if you're purchasing a property that's renovated and you want to know, did they pull the correct permits and all that jazz. If they didn't pull permits, it's not really the end of the world. It should be factored into price probably a little bit. You should be able to get a property that wasn't permitted for a little bit less because they didn't go through the time or spend the money to get the permits. But at the end of the day, you should be getting a reliable home inspector in there to do their once over on the property with you after you're under contract. And they're really going to make sure that all the mechanicals, electric, plumbing, all that stuff is in good shape. I would often, regardless of whether or not permits were pulled, ask for the seller to provide some sort of warranty on the home as well. You can have them do it in terms of a builder's warranty, or you can get an aftermarket warranty through a warranty company. But this is where you would come to see whether or not the permits were filled. There's also zoning. There could be things in here that tell you if the zoning, let's say it is registered as a single family RSA 5, it is possible that they're using it as multifamily and have been for a long time. And there might be some document in here that shows you from 1930 something that the property was changed to be used as a multifamily, which means that you can continue to use it as multifamily, even though it's actively zoned as a residential. Check with a real estate attorney on all of this stuff. Don't take my word for it, but just kind of giving you a little idea of what's going on. So there you have it, the Philadelphia 10-year tax abatement. I hope that you now know more than you did coming into this video and can make a more educated decision on what kind of property you're going to purchase next. I forgot one last thing. I know that I said the tax abatement will run out, but if you are an owner occupant of the property, that means you did not purchase it as a rental property, an investment property. You get what's called a homestead exemption. You do have to apply for it by a certain date every year. You only have to apply for it once, but there is a certain date you have to do it by. But if you apply for the homestead exemption, they do give you an $80,000 exemption on your taxes. If I do the $80,000 improvement exemption, that does reduce my taxes now to $4,895 from $6,000. So that's $1,200 a year and about $100 a month, something like that, that you're gonna save on your taxes with that homestead exemption. So make sure to apply for that. If you learned something new today and you wanna keep learning everything there is to know about Philadelphia, whether it's real estate related or just the Philadelphia area in general, don't forget to like this video, tap the subscribe button and hit that bell for notifications. That way you're notified next time I release a new video. Also, please feel free to contact me directly at my email address or my phone number down in the description. This has been Naveed Aberg with Navigator Realty Group, signing out.